Okay, so I like to use what's called filters or flags to judge the conditions of the setup. No two setups are going to be the same. You're never going to get the same scenario time and time again, which is why I've come up with these little positives and negatives that go for or against the trade. Now, the positive list. The stronger the move, the better. A large, strong, good drive to the highs or good drive to the lows, better. We talked about how that's important. The bigger that move, the more likely the first pullback is going to be bought and you're going to get a continuation of the trend. If it's shallow and not much of a move, then it's not scared enough people, it's not sucked enough people into it, it's not going to be as powerful a move. Volume. The higher the better. Same with all these trades. We want a nice big volume indicating participants are coming in. So good strong move, good high volume. Key level broken. Talked about that. This is a very positive thing. If we've got a decent resistance level there and the market's driven straight through and then we're getting a pullback above it, that's far more powerful than if the resistance level was here and we'd driven up, tagged it, and we were just pulling back here, because that may indicate that level is going to hold. I'd rather see it broken and then do the pullback above it in the case of an uptrend than I would see it tagged and do the pullback below it. So for me, that acts as a positive to the trade. Additional key levels acting as a magnet. What do I mean by that? So let's say we've broken through a key level, but now we have a yearly high up there and we're pulling back here. There's an obvious psychological magnet for the price. It wants to pull towards it because that's a level that everyone is looking at. So anyone who wants to go short is probably saying, well, I'm going to wait until it tags that before we get going. And anyone who wants to go long is thinking, well, I'm going to buy before we get there because we may break through. So you can see the psychological benefit of having a key level above or below your level and acting as a magnet. Now, I want to see low volume on the pullback. So if we're driving to the downside, we're pulling back. Yeah, this should be really good volume if we're looking at our subchart. And then very small volume here, indicating that there's no participation. The pullback is not generating any interest. No buyers are considering this as extreme value. All it is sellers backing off the throttle. Perfect scenario. And this just goes hand in hand with the strong move. The larger the better. The further the drive, the better. So the longer it goes, the further it goes. Very similar, but in terms of range, in terms of ticks. The strong move really is how quickly it's doing it. Is it doing it very aggressively in a 5-minute period? Or equally, if it's a long drive and it's taking longer time, that's fine, but I like to see both. Good strong move in a very short time frame and a long drive. So negatives. What is a bad sign with this setup? Well, I don't want to see the pullback encroach too far into the drive territory. What do I mean by that? So we've got the up drive, good strong. I don't want to see this pullback coming right back here. That's a no-go for me. It's got to be shallow. It's got to be right at the high. It's got to be driving up and just holding near that high, not pulling back halfway or below, or more than that, because that's indicating that maybe the supply demand has tipped too much the other way now. So I don't want to see that. Another one is I don't want to see the key level tagged and failed. We talked about that. I don't want to see it coming up to resistance level and failing at that level before pulling back. I want to see it clearing through. So that's a negative for me if I see that. And similarly, if the key level is too close, just like we like to see the price as a magnet above, sucking price up towards it, there's no point in doing it if we're right by it, because you haven't got enough room on the trade. If that then becomes a resistance and stops price from going any higher, there's not enough meat in the trade. There's not enough profit potential in that trade for me to take it. Because if I take it and I'm right, there's only a few ticks and my risk-reward ratio is going to be skewed. So those are the key factors for this strategy.